Do conventional loans require an appraisal? Well, yes, an appraisal is going to be required the vast majority of the time when you're using a conventional loan to purchase or refi a residential property. But there are a few exceptions, and we're going to break those down for you here. Hey guys, it's Gavin Sessions here with Loans Made Simple. And if you're curious to learn about all things related to mortgage and home loans, you're in the right place. Subscribe to our channel. We post new content each week. And if you're ready to get qualified for a home loan or you're looking to get connected to a great real estate agent, our contact information is in the description below. All right, so when is a conventional loan going to require an appraisal? Well, let's start at the top. So conventional guidelines require that the home is worth more than the loan amount that you're trying to borrow, right? So if you're trying to borrow a loan amount of $300,000, we simply need the home to be worth more than $300,000. Now, it's not just $1 more. There's more to it than that. But generally speaking, that's a good place to start, right? So as a consumer, you would never want to owe more on the property than what it's worth. And that would be a situation where you're underwater, right? It's a situation that you want to avoid at all costs. Now, there's maybe a couple of exceptions where it might be okay to owe more than what the home is worth, but that's a pretty rare exception. And one of those might be if you had substantial down payment assistance. In other words, you borrowed the most you could on your first mortgage, right? So maybe 96.5% to 97% of the home's purchase price. And then maybe you got a second lien to help with your down payment and your closing costs. That might be a situation where you would owe more than 100%, right? So very simple math in this situation, right? $100,000 house, let's say you borrowed 97%, that'd be a $97,000 first mortgage. And let's say you needed some down payment assistance to cover your down payment and your closing costs. So in this case, it'd be a 3% down payment. Maybe you took a 7% second mortgage. In that case, you might have total debt of about 104%. In other words, you borrowed more than what the home is worth, but the first lien position on that is only 97%, which is about the absolute maximum. So hopefully that makes sense and we can get into more down payment assistance stuff in the future. And if you have got a specific question about down payment assistance, we'd love to answer that for you. So leave us a comment below or reach out with our contact information. So continuing on here, an appraisal is a third-party evaluation of the property, right? The appraiser's job is to determine the value of the property compared to similar properties in the immediate vicinity. And those similar properties are going to be of age, of size, and of location, right? And please note here, it's just super important to know that an appraiser does not work for the lender. They are truly a third party, meaning they work for a different company. They might be self-employed. They might work for an appraisal management company. They might just be an employee of a local appraiser office, but the appraiser does not work for the lender. So that's the super important thing to note here. One other important thing to note is an appraisal really isn't that expensive. Maybe $500, $600 to up to $750. It really just kind of depends upon the complexity of the property, but it really shouldn't be a deal breaker for you when you step into a mortgage transaction. It's probably best to just have it in the back of your mind. Well, an appraisal is going to be required and just expect to have an appraisal. And then occasionally you'll get a waiver and that would be a pleasant surprise, right? So expect to pay for an appraisal and then be pleasantly surprised if you don't need one, right? Another thing we always want to mention is that appraisals are nothing to be feared and actually can be a wonderful consumer protection, right? So we talk about things in the mortgage process that might have a bad rap, right? Credit reports nobody likes, mortgage insurance nobody likes. Sometimes we get a little pushback on appraisals, but honestly, appraisals can be really good for the consumer and we would encourage you to get one if the situation's right. So if an appraisal is required the vast majority of the time, then what are the exceptions? Well, there's one main exception and it's called an appraisal waiver. And that is going to be provided through Fannie and Freddie's automatic underwriting tools, often referred to as AUS. So lots of acronyms in the mortgage business. AUS stands for Automatic Underwriting System. So what are the eligible transactions for an appraisal waiver? Well, that'd be a one-unit property, including a condo, a primary residence, or a second home. In other words, an investment property purchase, you're not going to get an appraisal waiver. However, an investment property refinance, you might see an appraisal waiver on Fannie Mae only. So that's pretty technical. You would likely see one, or you could see one on certain purchase as well as rate and term refis. And a rate and term refi is where we are refinancing the existing debt on the home. We're not taking cash out. Now, thinking about cash out, you could see an appraisal waiver on a cash out transaction, but it's highly unlikely. We see it maybe once in a blue moon is it. And that's because cash out refi transactions are just inherently more risky, so you're less likely to get an appraisal waiver. All right, so in order to get an appraisal waiver, we must receive an approve eligible finding from our AUS tool, and that would be either Fannie or Freddie's tool, right? So we've got to get an approve eligible, and then it also has to provide us that appraisal waiver. So one other lens we might want to use to look through this would be through a loan to value lens, right? So on a purchase of a primary residence or a second home, you could get an appraisal waiver for a loan to value of up to 80%. That means if you're making at least a 20% down payment, then you have a chance that you could receive an appraisal waiver, right? But if you're putting less than 20% down and it's a purchase of a primary residence or a second home, you're not going to get an appraisal waiver, okay? On a refi, if you're not taking cash out, you could have a loan to value of up to 90% and likely and possibly get an appraisal waiver. But in the circumstance where you want to borrow more than 90% of the home's value, you would not get an appraisal waiver. And then on a cash out refi transaction, if it's a primary residence, as long as your loan to value is 70% or less, then you'd be eligible and you could get an appraisal waiver. If that cash out refi transaction is on a second home, the maximum loan to value would be 60% in order to be eligible to possibly get an appraisal waiver. Just want to pause the video for a quick moment and invite you to connect with us. If you're ready to take the next step to get qualified and speak to a mortgage professional, a loan officer, or if you'd like to get connected to a great real estate agent, click the links below. So let's make this practical for you. We've got a client we're working with right now, and her name is Robin. Her and her sister inherited a home from their mom. The home is currently owned free and clear. So Robin's going to occupy this home as her primary residence, and her sister would just like to be bought out, right? So the appropriate thing to do in this circumstance is to take cash out to buy out the sister, right? So let's just say the home is worth $300,000. That means Robin, in theory, could borrow up to 70% of that, which is $210,000, right? In this circumstance, she's actually only looking to borrow about $175,000, so she'd be eligible for an appraisal waiver if the AUS tool gave her one. Unfortunately for her, the automatic underwriting system did not provide an appraisal waiver, even though she's under that 70% loan to value. So it's never guaranteed. And honestly, appraisal waivers probably should be thought of as the exception rather than the norm. So she, of course, is asking, do I need an appraisal? And the answer is, for her, in this specific case, yes, an appraisal is going to be required because we're taking cash out and because we did not get an appraisal waiver through the automatic underwriting system. So hopefully that makes sense. All right, so that's a lot of information and that's all fine and dandy, but what does this actually mean in layman's terms? So long story short, you're more likely to get an appraisal waiver through automatic underwriting when you bring a substantial down payment on a purchase or when the loan to value on a refi is lower. So just because the guidelines allow for a certain loan to value, just like with Robin's story, doesn't mean we will always get an appraisal waiver. So you're more likely to see one with a down payment or equity position of greater than 20%. And just keep in mind, the larger the down payment or the equity position, the more likely that you'll get an appraisal waiver. So in addition, the AUS tools that we leverage to determine whether an appraisal waiver is granted or not, they leverage automatic valuation models that they're able to find online and that might support a property's value. So a big but here, the online tools are not always spot on and they honestly should be viewed as directionally accurate only. So I like to lick my finger, stick it in the air, see which way the wind's blowing, and view it as no more accurate than that, right? Directionally accurate's the right approach for these automated valuation models. And that's especially true in non-disclosure states. And a non-disclosure state is a state that does not require for you to share the purchase price of a home that you recently bought, right? And actually, you might be encouraged not to disclose that because that could save you in the long run on property taxes. So let us know if that doesn't make sense. We'd love to answer that question for you. All right, so let's put a bow on this section and move on. So just because the property might meet the eligibility to receive an appraisal waiver doesn't mean that you're going to get one through the automatic underwriting tool. All right, so we talked about the properties and transactions that might be eligible for waiver, but there is a list of transactions and properties that are not eligible. And let's just quickly review those. So anytime you want to buy a 2, 3, or 4 unit property, that's not going to be eligible for an appraisal waiver. Anything that's new construction is most likely going to require an appraisal, an actual appraisal, for 2 reasons. One, the AVM data, the automated valuation model data, probably doesn't exist yet. And the additional reason for that is sometimes the appraiser is the only real boots on the ground to determine that that new construction property actually exists. All right, continuing on. So if you're purchasing an investment property, even a single unit investment property, you're not going to get a waiver. If you've got a co-op unit or a manufactured home, you're not going to receive a waiver on that. If the construction is just proposed, you will not receive an appraisal waiver on that. And that's, again, because the property doesn't yet exist. If you're doing a construction to permanent loan, in other words, like a single close or a 2-time close construction loan, we're not going to get an appraisal waiver on that. If you're doing renovation or an energy efficient loan, that will be excluded, as well as leasehold properties and a couple of different specific loans in Texas are not going to be eligible for waivers. Properties that are located in community land trusts or others with resale price restrictions, those are not going to be eligible. Any transaction where either the purchase price or the estimated value provided to the automatic underwriting tool is over $1 million, that's not going to be eligible. Transactions using gift of equity would make them ineligible. And then last but not least, any loan that does not receive an AUS approve except eligible. So that was a pretty exhaustive list of transactions and property types that aren't eligible for an appraisal waiver. And just to kind of circle us back, right? If you've got a vanilla single family home with a large down payment or a large equity position, that's the most likely transaction to get an appraisal waiver. All right, so let's say your loan does qualify for an appraisal waiver. Why would you want to do that? Well, you get to skip the cost of the appraisal, right? Which is maybe will save you $500 to $1,000, and you could possibly speed up the closing time, right? So an appraisal lead time is sometimes up to 2 weeks. And of course, it depends on where your property is located and how busy the market is, right? So you might save some money and you might save some time, but keep in mind before assuming, and even if you qualify for an appraisal waiver, that obtaining an appraisal can be a super valuable thing for you as a consumer. So again, just because you qualify for an appraisal waiver doesn't mean that's the right call, as an appraisal can be a super valuable thing to you as a consumer. It could help you ensure that you're not overpaying for the home, right? It's going to protect you from borrowing more than what the home is worth, as you never want to be underwater. An appraisal actually can give you negotiation power with the seller. So let's say you agreed with the seller to buy a home for $500,000, but the appraisal came in at $475,000. Well, that would give you an out to either walk away from the purchase of that home or bring you back to the negotiation table with the seller. And you would have the power as the buyer in that circumstance to try to get the seller to reduce their price to match the appraised value. In this case, that might save you $25,000 off the purchase price, which would be a very nice benefit to you and certainly worth the cost and the time associated with that appraisal. And then last but not least, the appraisal can provide you some wonderful peace of mind. So generally speaking, on a conventional loan, you're gonna need to get an appraisal. Of course, we talked about appraisal waivers and when those might happen, but keep in mind that an appraisal might be the best decision for you as it provides you some great protection. So if you're looking for more information specifically on appraisals, I'd recommend that you watch this video right here. So if you're good on appraisals at this point and you just want to continue your education of the home buying process, we'd recommend that you watch this video right here.